We understand that the 5+ years of inflation above target cannot be cured in 9 weeks or by a single month of modest price decreases. This Fed will not waver.
Fed Chairman Kevin Warsh there defending the decision to keep rates on hold with 3 FOMC members calling for a hike. You're watching The China Show. I'm Yvonne Man with David Ingles.
Good morning. We're counting down to the open of markets in Hong Kong, in Shanghai, and in Shenzhen. Let's get to your top stories today. Stocks across the region, as you can see on a benchmark basis, flat, under pressure underneath the hood. You have long-dated Treasury yields jumping as traders question the Fed's credibility in the fight against inflation.
Data center component maker Zhongji Innolight set to make its Hong Kong debut after raising close to $7 billion in the city's biggest listing in years.
And China's AI disruptor Moonshot raising $3.5 billion in a larger than anticipated funding round that's ahead of its own IPO.
Right, it's a day where you really have to focus on the micro and the macro,
Yep.
if anything. We're still waiting, of course, a little bit more details in that Samsung earnings call for the second quarter. Certainly that's one thing to watch here when it comes to where the AI trade goes. But we got to get back to what the Fed did or did not do in some ways, right? How many times can you say hold, but still stay hawkish, but the bond market doesn't really buy it at this moment of how serious the Fed is ready to really hike rates?
Well, I mean, you look at how the market reacted once the statement came out.
Yeah.
And then once they got into the press briefing, into where we are, right? And I think one of the headlines I woke up to this morning was you had the Fed that did hold.
Yeah.
But then you had the 30-year yield at the highest.
19-year high.
Yeah, at about since the mid-2000s. So it underscores, I guess, the angst around the inflation story, debt burdens, of course, and I guess to your point, why risk assets, I was going to say equity markets, risk assets seem to be struggling, right?
Yeah.
Despite the fact that you are getting some decent earnings on the micro part, which you alluded to.
Yeah, Samsung was pretty solid, right?
Solid,
And
yeah.
still the stock is lower. It's kind of like the SK Hynix sort of fallout that we've been seeing where they deliver really solid fundamentals, 200%, you say, north of growth in terms of revenue. But it's still not enough to appease the traders out there in some ways. So it continues to be that sort of trade. But even overnight, right, you did have a mixed sort of U.S. tech earnings wrap. Right? You know, Microsoft actually gained. Meta was a disappointment
on
there.
the other side of that.
So a lot to really digest in the last couple hours, really.
Yeah, as we go into today, right? So I think that the bar for markets to be impressed is certainly much, much higher.
Yeah.
It's not just in the U.S. And I think when you talk about this, the biggest debut, the biggest listing in Hong Kong in many, many years, the grain market suggested that we are looking at a lukewarm response. I think we're down about 4% on Innolight as we go into the first trading session, which I guess goes into the fact that the macro is eating into the micro currently.
Yeah.
The 2-year yield was down going into this morning. The 30-year yield is on the upside. So you do the math on that, you get an idea of the shape of the curve. 2-year yield on your screens, you had the dip. We're closing the difference somewhat going into the Asian session today. The 30-year yield, of course, was about 5.2% at one point. We're a touch below that, but that's simply academic, just looking at how on an all-in yield basis we are, as you can see as the chart shows, back to 19-20-year highs. That goes into then the equity market component to the market story today, where you have U.S. futures taking into account the after-hours move in the U.S. tech space. You have Taiwan, you have these new rules around Korea, which we'll get to in a moment. SK Hynix is down a further 3.3%. As you look at on a benchmark basis, this is really what we're seeing there, 1.5% to the upside. Now, we'll need to talk about the BOJ at some point because that's the next one to watch on the macro front in the Asia Pacific. Have a look at A50 futures. Just to note, so we noted Innolight. We're also waiting for any updates on the Politburo on the China story. On top of that, there's this ongoing rally taking place here in Hong Kong with financials and Hang Seng Tech. We'll get to all of that and unpack most of those things over the next few hours or so. But just to also mention, we're also getting more updates coming through out of Iran there and the skirmishes that are, again, taking place.
Yeah, we're still tracking oil prices here this morning as well. So that also reflects a little bit of the macro side of things. And it goes to show really the angst, as you mentioned, when it comes to that Fed press briefing, right? You think about the amount of questions that, reporters kept pressing him on why are you still holding rates when inflation has been away from its target for some time now. You did hear, of course, that hawkish rhetoric from the Fed chairman, Kevin Warsh. But it seems like you're getting more. It's not really just about what he said, right? The fact that there are 3 dissents asking for hikes does say something, right? That maybe this public family fight is getting a bit more public.
Yeah, it's no longer in the in the confines of the family home, as we just talked about there. But yes, I mean, despite the fact that you did have that decision to hold interest rates, you did have, of course, the Fed Chair Kevin Warsh reiterating that the central bank remains committed. While, of course, not really having a lot of believers when you look at market reaction, committed to delivering price stability. Have a look.
Let me reiterate. There is no soft inflation target. There is no soft implicit target, not on this committee's watch.
Let's bring in our Bloomberg Economics chief U.S. economist, Anna Wong. She's been standing by and joins us more from Washington. Anna, I'm sure you were watching all that unfold very closely earlier on this morning. Just walk us through, I mean, the amount of questioning and people really pressing him for answers and why still hold. What was your biggest takeaway from this decision today?
Yeah, I think that had he canceled his press conference, then the 30-year would not have spiked as it had. Because going into this meeting, the majority of the analysts on Wall Street believe that the Fed will hold. And in fact, in the 30 minutes after the Fed decision, long-term yield was pretty stable. It was only midway through his press conference where I think investors started losing patience and became very frustrated because what they were looking for is for Warsh to explain why the Fed did not hike and also what are the criteria for the Fed to hike in the September meeting. They got none of that. And ultimately, investors likely walked away concluding that despite his repeated insistence that the Fed is committed to 2% inflation, he has no real plan or tactics to translate that into action.
So, Anna, how do we read through, if that is at all possible, from the lack of details overnight, from the Asia-Pacific standpoint, of course, into future meetings of the Fed? I mean, to your point, right, market reaction, this is from your research, by the way, we're showing on the screens. The pricing around September all through December actually fell. Can markets expect the Fed to be on hold until they blatantly tell us they're about to hike?
Yeah, so I think partly is that when the long end of the curve really spiked like what we are seeing right now, that is going to exert a lot of restraint onto the housing market and also tighten financial conditions. And as a result, it actually ironically reduces the likelihood of a hike in the next meeting as the economy slows altogether. So that probably is one of the calculus for why September chance of hike also went down.
Anna, thank you so much. Anna Wong there, our Bloomberg Economics chief U.S. economist. By the way, you can check out more on Anna's work there. It's on Twitter/X, of course. She has currently an 8-part guide, I believe, to trying to decipher the language coming through and the style of communicating coming out of Kevin Warsh and his team there. All right, the other big story we're tracking, of course, is the biggest trading debut here in Hong Kong in many, many years. Zhongji Innolight, close to $7 billion IPO here in the city. It's the biggest since, I believe, 2019. Gray markets were lackluster, down about 4% last we checked as we go into the open today. Let's bring in Julia Ferretti here, our Asia Equity Capital Markets reporter, to tell us more about this deal and the significance, of course, of this cash raise.
So as you said, it's the biggest in 7 years, so there's quite a lot hinging on its performance, and it's doing well. It's the biggest since Alibaba's $12.9 billion listing back in 2019. And it's really a key example of the whole theme that has been driving Hong Kong IPO activity this year. Basically, it's in the AI infrastructure supply chain. Its shares had, before the drop in the last month, more than doubled, basically. And so it's been a key beneficiary of the AI boom, and we've seen many other companies in the whole infrastructure space coming to Hong Kong and list in Hong Kong. So it's really the biggest example of this theme, but now, obviously, in a way, it's coming at a very different backdrop to a few months ago. Obviously, there's a lot of concerns around excessive spending. Its biggest clients are some of the US hyperscalers, so it's quite connected to the whole the jitters that we're seeing over the capex.
Yeah, I think it makes up about 40% of the revenue comes from their customers like Alphabet, Amazon, Meta. So navigating those geopolitical tensions is certainly very key. So what can we expect from the debut today?
So as David said, the grey market wasn't great. It was down 4%, and it did price at a 20% discount to the close in Shenzhen. That was on Monday, though. Since then, the shares have come down quite a lot, so the discount has narrowed significantly. So it's probably fair to say that we're not expecting a huge pop today. If it doesn't drop, maybe it'll be flat. It's just coming at a worse time than other deals previously. There's a lot of concern about that the valuations have just run up way too high, that the spending is not sustainable. So we're not. So whilst it's obviously the largest deal in 7 years, we're not expecting a blowout performance.
All right. That ceremony underway there at the Hong Kong Exchange. I believe that's where you're headed off to next, Julia. Thanks for joining us before
we'll see you there.
Julia Fiordi, our Asia Equity Capital Markets reporter. Still ahead, we're talking more about the Fed and really the market reaction we've been seeing. The dollar certainly has cooled since that Fed decision here to hold. HSBC's Paul Mackel joins us to discuss, of course, what went down overnight and what does this mean for really the FX world.
All right, counting down to the open of trade in Shanghai, in Shenzhen, and here in Hong Kong. Futures are pointing, as you can see coming up on your screens, of course, as we go into this big IPO today. I think we're lastly called slightly on the weaker side of the cut-up as we approach the opening bell, 18 minutes away. There we go on your screens. This is the China Show.
Well, I think Warsh was a little bit more dovish than people expected, which is why you're seeing a rally on the 2-year. And the long bond doesn't like it. The long bond doesn't like that they're not fighting inflation.
I'm going to be looking for, eventually the next speech by Waller, because that's going to give us a sense of what did the core of the committee actually, what is he thinking?
And I also think many people on the board are leaning towards a rate hike as well. We've already gotten a lot of indication of that, and so I do think we do get rate hikes in September. I actually think today would have been better.
The market reaction speaks very clearly that now we need to talk about what is the credibility of the committee, because it cannot only be talk, you will eventually have to follow through, and that's why the probability, given this market reaction now, has gone up quite significantly that they will have to move at the next meeting.
All right, some of our guests are reacting to the Fed's decision to hold interest rates steady, plus, of course, all the color and context, if at all, during the briefing about, let's call it about six hours back. Right, joining us here in set, he's managed to get through with barely any sleep. So, Paul Mackel is here with us, a global head of FX research at HSBC. He stays up so you don't have to. You watch the press briefing and everything else. What do you make of it in totality? Where are we now?
Well, in totality, what we were just talking about is that there does seem to be somewhat of a sell America trade that had happened. They weren't very confident about the message being delivered. So we saw yields going up, Treasury yields. We saw the reaction in the U.S. equity market and the dollar softer. So this is the first time that we've seen this in a good few months at least, that the sell America trade had a glimpse of coming back.
How long-lasting do you think this sort of steepener trade is going to be? Because the fact that there are 3 descents, that sends a really strong signal that it just seems like these rate hikes are just being delayed more than anything.
Well, actually, I think what it really means is that the next couple of CPI prints and labor market reports are so incredibly important in terms of what's going to happen in September. So we're probably more data dependent than we have been, and again, quite a long time. So, look, I think the market wants some confidence and trying to understand what is this new regime looking like under the new chair, and it's still quite uncertain.
The likelihood is rates go up rather than the opposite direction. What does positioning around the dollar tell you about where the dollar likely goes amidst that general backdrop?
Well, the view in the bond market or the short-term interest rate market is that the Fed will be raising interest rates, but from our perspective is that they won't. They'll just be on a prolonged period of a pause. But in terms of the positioning of the dollar, I don't think the market is that long the dollar at all. it's kind of waxed and waned over the last couple of months. But the only place where I think that the market is long dollars in a meaningful way is probably versus the Japanese yen.
And is that, I mean, we could talk about
that's complicated
what's
too.
the line in the sand. 163, we haven't seen anything as of yet of what the BOJ could. I mean, if the Fed holds this week, or if they have, what is the BOJ? What implications does it have on the BOJ, if any?
I think that they're going to be unchanged as well. It's highly unlikely that they're going to raise interest rates this week. I mean, again, it probably comes down to the messaging. What are they signaling about? Are they prepared to go faster, like according to what the news reports were suggesting with regards to raising interest rates? But there's probably some breathing room, the fact that the Fed didn't move. But you talk about this line in the sand where there could be potential intervention. That line in the sand has been moving quite a bit. So you can't be that confident that the line in the sand is 164 or so. But nonetheless, I think that given how the Fed, its outcome from overnight, the BOJ can just sit back and probably have a little bit of breathing room.
Okay. So how do we make money in FX markets?
Well,
now that things do seem settled.
I think, look, from our perspective, we still think that the dollar is going to be grinding higher over the next few months. Okay, so as long as you still have this rate hike debate in play, and you're still looking at other economies, outlooks for monetary policy, maybe where a lot of good news is already priced, the dollar still comes across as the cleanest dirty shirt, at least in the G10 context. Okay. So I think there's been a lot of question marks still in the outlook for the euro. So you're trying to find opportunities to sell that, even something like the British pound. I think the Australian dollar on the back of the CPI numbers, which we had, I think that definitely takes a rate hike off the table. So there's a few currencies there that I think you could be looking to try and sell versus the US dollar.
Do you think the RBA is done?
Yes.
In the hiking cycle? Like
yes.
That's behind us now?
Yeah, I think that's done. I think that we did have quite a positive employment report, but that's not enough, right? I think that, again, coming back to breathing room with the CPI numbers and also the way that the governor was talking about weak productivity growth, they can sit back and wait. They were very proactive at the start of the year for the right reasons, and now they're feeling comfortable.
You've given 17 trade ideas. You said some of them have actually delivered and done well. You said the clearest outperformance you've seen is within the Asia FX space. What's still going to work for the rest of the year, you think?
Well, there's a small correction. There's actually been more than 40.
Okay.
There you go. But when it comes down to the Asian currencies, which have been performing quite well in our view and will continue to do so, one of them is the renminbi. We've liked the renminbi on and off through different expressions since the start of the year, whether versus the dollar or versus the euro or even something a little bit funkier like the Swiss franc, and it just keeps performing. And I think what's happening there is that still you have this FX policy bias from China to suggest that the currency is on this path towards getting stronger over time. It's very gradual, but it's working, and we like that. The other trade which we like currently right now is the Indian rupee. Given the regulatory changes that occurred, and you're seeing the so-called FCNR inflow actually happening, and it's supporting the currency. So there's a window of opportunity for that to be performing better as well. So we're not spoiled for choice in terms of what to like in Asia at this juncture, in particular against what I'm saying about the dollar still being relatively strong going forward. So you really have to pick your idiosyncratic stories.
Can you clarify that for us? And when you look at which central bank out there has the loosest monetary policy, it's the PBOC relatively to the others. But that's also the currency where you expect more strength. And the opposite is true for the dollar and the Fed, and of course the tightening bias that they might have. Square that circle for us. Why do we expect the Chinese currency to appreciate further given that macro backdrop?
Well, it's a good question, because what it really demonstrates over the last 6 months, if not longer, is that the behavior of the renminbi is not tied to interest rates or interest rate differentials. It's a completely different regime. Yeah. And if it was more aligned with what interest rate differentials were implying, then the exchange rate should probably be closer to 7, if not even above it. And I think it really comes back down to, what's, as I said, the policy guidance, the way that the corporates are dealing with their big stock of FX that they're converting into local currency. And we think that's going to continue.
The underperformer has been the rupiah. I'm just wondering, have we seen enough from regulators, from officials about ways? I mean, obviously with the bank,
governor
leaving as well. I mean, how much clarity are we still getting on the outlook?
I think if you look at the behavior of the exchange rate, it's actually been pretty stable in the last month. So it tells you the reaction function of the central bank to be raising interest rates pretty proactively has helped. Now, is it a solution to the rupiah? I'd say probably not, because one, you're still going against this, I said, strong dollar tide. The second thing is just what's happening in terms of the structure of the balance of payments. A little bit of a boring topic, but those outflow pressures are ongoing. So you can buy time, and I think that despite the change in the governor, the exchange rate has been stable.
Do we need to be worried about inflation at all globally? You know, oil prices here and there, they're 70, we're close to 100. That doesn't seem to be showing up in rates markets as much as it did back in March.
Look, I think we need to be very careful, of course, because it was only a few weeks ago where we all thought that tensions in the Middle East were coming down, and this was going to be a series of calm for an extended period, and eventually even maybe a solution. That's completely changed.
Okay.
So the inflation numbers, which have been quite soft recently, are now risk to surprising to the upside. Yeah. So I don't think that we're out of the woods yet when it comes down to inflation, especially where energy prices are.
Paul, it's always great to have you. Hope you get some rest today. Paul Mackel, Global Head of FX Research at HSBC. Take a look when it comes to, of course, the pre-market in Hong Kong, and certainly we're watching this debut, Zhongji Innolight. This is, of course, a dual listing of the company that is also listed in Shenzhen. Not too much excitement, I guess, right now. We are seeing the shares lower by 1%.
Yeah. Gray market suggested something more, but I think in the cash markets, it's somewhat of a gray opening, kind of like the weather out there today. Okay, we have lots more ahead, including a preview of the trading day ahead. This is the China Show.
Your agenda today, of course, we've been tracking this Zhongji Innolight debut in Hong Kong. It's the biggest one in years for the city, but a pretty lackluster start in the pre-market here right now. We're watching the likes of Zhongji Gold, Moonshot. We'll talk a bit more about what's been the plans there for the company. But yes, the Zhongji Gold and Ally Gold scrapping that nearly $4 billion merger certainly could lead to some sort of reaction here today. We're watching chips, given the Samsung story, and pretty decent numbers, actually pretty strong numbers coming through from the company. Energy, given what we've been seeing in oil prices as well. Financials in Hong Kong have been doing quite well as well. And, of course, this tech rally.
Maybe a little bit too well on financials. I think it's the first time in about a year or so we're seeing some overheating signs on the technical side of things. We'll talk about that in a moment. But, yes, just to continue the earnings story, New Oriental, we'll talk about that, seems to be moving on the back of earnings and an upgrade. We have Yum China and Prada also on deck today as far as results are concerned. Right, let's get to the trading debut today. And we are looking at a fairly subdued first day of trade here in Hong Kong. It has been, of course, listed in Shenzhen for some time. The opening bell, including the banging of that gong, quite literal one, not proverbial. This is the China Show. All right, good morning, and we're counting down to the open of the cash markets here, the biggest trading debut in Hong Kong in 7 years since Alibaba listed and raised, 11-12 billion? Back in 2019, Innolight is coming here, it's listing, it's raising about 7B. And in a couple of seconds, of course, they'll be marking the open and the start of trade here in Hong Kong in what seemed to be going into today a fairly lackluster open, but of course it is just early days when you look at this one, Yvonne.
Yeah, you got to look at that discount, right, that we see in the A-share market and whether we see that actually continue to narrow or not, right? We have our BI analyst, Shan coming on here the next hour, and he really thinks that it could be trading a little bit more on the narrow range in terms of that discount. So certainly one thing to watch, given that they are the market leader when it comes to optical transceivers, right? The part of the supply chain, which has been a darling up until maybe recently. We have seen, of course, that the Shenzhen listed stock has come off some of its recent peaks. So certainly where that goes in the whole AI trade is one discussion, of course, and certainly a lot of questions about this company's exposure to the U.S., right? So their key customers are these U.S. hyperscalers, right? So how are they going to navigate some of these geopolitical tensions between the U.S. China, especially when it comes to this whole AI debate? That's going to be the key question there. I love Bonnie Chen's suit today, though, by the way. I love it. All right, the bang of the gong just happened
nice
there.
Gradient.
Yes, I like the gradient.
Right? There's a gradient effect there.
Both shares, A and H, are lower here this morning, with the Shenzhen listed shares heading more furtherly south. Let's broaden it out a little bit and look at what we've been tracking, right? The last couple hours with that Fed meeting, we have to bring back to the macro risks out there, right? Because now the lingering question from the market as bond traders and the like wake up is the Fed behind the curve? The fact that, we've seen inflation be away from its target for the Fed for years now, and still you hear Kevin Warsh say why he decided to keep rates, the Fed decided to keep rates on hold. There is a sense that maybe the Fed is losing their inflation fight credibility, right? That's why you're seeing one of the steepest sort of movement after a Fed meeting when it comes to the yield curve since the mid-1990s, right? We saw that 30-year shoot up to a 19-year high. So there's that to deal with. That really has, in some ways, wobbled this equity rally as well. So not risk assets, not just the dollar, but bonds on the long end have been selling off. Onshore is looking like this, though, right? It's a little bit more stable. We're lower by about 0.25%. Shanghai is slightly above water, but you are continuing to see a bit of that shakiness in that Shenzhen market. Chinex is down close to 1%. We're watching, of course, the chips, right? The Samsung story was actually quite strong, but still, the stock reacted negatively. Perhaps that's why we are seeing the likes of Capricorn Tech also lower by 2%. Medea Group, you're seeing the Kuwait. Some of these consumer names are doing a little bit better. We'll talk about the Hermes story in just a little bit because quite interesting sort of lines and rhetoric came through from the earnings call about where they see the consumer sector, what indicators are they looking at, pork prices, they say, to determine where sentiment is. CATL shares are slightly to the downside here today. We're watching iron ore very closely. Shanghai crude also is elevated. We're up about 5% here right now. We continue to see more fallout when it comes to Shenzhen. We're more than 1% losses now. Hong Kong's looking like this. So yes, this rotation into Hong Kong seems to be gaining a bit more traction now, right? We take a look at what's been going on. HS Tech had a stellar session yesterday. As Dave mentioned, right, the financials continue to do quite well here. We're watching very closely, of course, when it comes to, where we are, right? Dave has mentioned things are looking a little bit overheated in the banking space. But HS Tech, right, as we count down to these earnings, it's going to be quite interesting, right? Xiaomi, though, is down by 1%. Interesting enough, Macquarie actually just did an upgrade on the stock. So we'll see what the reasoning behind that is here today. But HSBC is slightly lower. Tencent and Baidu, though, are still in the green. Baba is lower by 1. So not much really, I guess you could say, direction of what we're saying, but overall, things are looking modestly better compared to the rest of the region here today. 676, though, for dollar China. That cooling of the dollar is really strengthening the currency here today. We do have the likes of Shan from Goldman Sachs coming through in the next hour. They, along with the likes of Bank of America, a growing amount of economists are saying what we could expect from this Politburo meeting could be quite interesting to what we heard. Remember back then, September 2024, when the Avengers of Chinese regulators, Chinese policymakers came through and basically unveiled, cuts and the like. So certainly maybe we might see some sort of stimulus that comes through the next 24, 48 hours or so. Let's take a look when it comes to Zijin Gold. So they're scrapping this merger, which we've been talking about months ago. The stock is doing this right now. So actually maybe some relief. We're up from 4%. Obviously, we're tracking gold prices as well after that Fed meeting. And also New Oriental, right? So earnings were a beat. But Macquarie also upgrading this stock here. And you are seeing the stock flying in the pre-market. This is what it's doing here right now. We can fire that board. There you go. 14% gains, Dave.
Yeah, very nice day at school there for New Oriental. Education. Yvonne just talked about this too. Just to also mention this rally across the financial space. The Hang Seng Finance Index has silently but very consistently, I think over the past couple of days, has had successive winning days. In fact, it's so much so, chart goes back, that's price, that's a momentum gauge going back to early of 2025 here. So as you can see, fresh record. But for the very first time in, I would say, about a year or so, that we are now looking at a 77 handle. So above 70, of course, tends to indicate overheating signs. Just to note that we are in that sort of terrain, given how quickly the rally has now come to fruition. Okay, very, very quickly before I go, so we talked about the tech space and this outperformance in the Hang Seng Tech Index. So we're now up about 14% in this current leg higher on the Hang Seng Tech Index. That is not the chart. We will correct that for you. In fact, you know what? Why don't we try and do this? Live TV. If I could ask my producers.
Oh, putting them on the spot.
Yeah, can we, orange box, type in Hang Seng Tech Index.
Oh, God.
This is live TV. Not a lot of people watch this anyway, so we're going to give this a go. Can we try that, please? Just to correct the chart, but what it's going to show you is the downtrend that we've seen from the peak last year. We're at the upper end of that channel that takes us all the way down. There we go. Hang Seng Tech, T, Hang Seng Tech, not that. Okay, you know what? Okay.
Fail.
Yeah, fail.
Don't do that again.
Well, live TV. Why don't we talk about... oh, no, I think we are going to get some... Let's see.
There you go.
There we go. There we go. There's the downtrend. 10% higher, 12%. We're at 14%. And as we were pointing to, we are at the upper end of the downtrend. Now, whether or not we break above that is something that we have to consider it in lieu of some of the technical issues here.
You're going to give our producers a heart attack, Dave.
Well, don't we every day, every single day?
Stop making them do these things on live TV. It's tough. It's tough. All right.
Yeah.
Let's talk a little bit more about Samsung earnings here right now. I'm looking at our chat, and these producers are like, "You owe me." For that. All right, Samsung results. Let's talk a little more about that. That seems to have drawn a line under risk today, but there's still plenty of churn when it comes to that tech trade. Meanwhile, lots to talk about on the macro front. We're seeing a sharp move in the long end of the curve. Let's bring in our markets reporter, Anthony Stevens. He's with us. Yeah, a lot going on here today.
Yeah, Samsung finally taking up now, kind of conclusively as the earnings call begins. It seems to be a much cleaner picture. Remember that they have a lot more DRAM exposure than HBM exposure compared to Hynix. So they are benefiting from this spot price push. There's going to be a little bit more detail on shareholder return. They say coming soon. So very similar to Hynix, but the market is showing them a little bit more grace, I want to say, than Hynix. And that's important for Korea, given that it's a much bigger company, and also important for the wider ecosystem because they have this foundry business. What is also interesting is that they continue to see a weakness in consumer demand. So this is not exactly good news for people who hold Apple or Xiaomi or these kind of things. Even Samsung is struggling to make money, even though it has its own in-house memory. So this memory chip kind of shortage is still a big problem for consumer electronics. So forgetting about the AI trade for just a second.
Yeah.
Now going into Taiwan, finally we have a day where a company reports good earnings and the stock is up. So we have UMC reporting good earnings and it's almost limit up. That's really important to stabilize Taiwan because under the hood of Taiwan, there has been some huge downtrends and Taiwan margin balances have gotten hammered because of that. Last thing in the stock market, we continue to see capital raising. We have Quanta doing a GDS, and as you guys touched on, Zhongji Innolight. How those two trade in the coming days is going to be very important before we even get to the Fed. People need to start making money on this capital raising. You know, Jupu capital raising was very tough on people. Minimax capital raising was very tough on people. Some of these deals need to start making money for this pipeline to continue being as robust as it is.
Okay, Anthony, thank you so much. Anthony Stephens there on what's moving currently and what to watch over the next few days or so. Let's stay on the tech theme. And by the way, on the tech theme that Anthony just mentioned, we'll have more, of course, in the Korea ETF story in a couple of minutes because that is the latest attempt, of course, to stabilize this market. Meanwhile, Moonshot AI has raised a larger than anticipated $3.5 billion in its latest financing round, riding certainly the momentum as its breakthrough Kimi K3 model sends ripples through Silicon Valley.
Yeah, let's bring in our China correspondent, Min Lo. Gosh. Tell us a bit more about what this tells us about investors' interest in the company now.
Yeah, it tells you that there is just a lot of appetite to invest in this company, right, whose K3 model has really shocked the tech world. You talk about its fundraising. It's raised $3.5 billion, which is far above its own target of $1 to $2 billion. So it secured a valuation of $35 billion, and it's going to open a new round of financing. It's now seeking funding at a pre-money valuation of $50 billion, and that's ahead of its expected IPO in Hong Kong, possibly as soon as this year. And so far, we understand that one of the key backers is a state fund, the National AI Investment Fund. So there's a lot of interest from the state and from private investors as well.
Okay, what is this about the technology that they need? They're seeking more NVIDIA chips.
Yeah, again, this is from The Information, which is reporting that the company is seeking more access to NVIDIA's Blackwell chips to develop its next model, the K4 model. And this comes as the US has already accused Moonshot of illegally accessing these Blackwell servers in Thailand. And the US is saying they want to investigate these Chinese AI models for IP theft as well. So at this point, it's not clear whether there would be more punitive actions from the US, but this is something that could potentially impact its future tech access, its client access, its reputation. It could impact fundraising as well. So it just adds to the challenges that it faces when it comes to the regulatory environment.
All right, Min Min, thank you. Min Min Lo there, our China correspondent, joining us with the latest when it comes to, of course, Moonshot. Still ahead, we've been talking about South Korea and this ETF market, right? They're tightening curbs when it comes to leverage ETFs as it tries to stop a rout that has wiped billions of dollars off investors' holdings. We'll have the details coming up next. This is Bloomberg. All right, we're tracking the Samsung earnings call here right now that is underway here. You're starting to see the stock actually turn a little bit more to the positive side of things, and actually
for now
it's flying on the KOSPI here right now. There you go, 7% gains for the stock. What we're hearing from the C-suite is that they're talking a little bit more about where they see the constraints, right? Memory supply constraints will be more severe in 2027. Perhaps that's what's really fueling the stock here right now when they see overall consumer market demand softening in the second half. That's interesting enough, right? Because they also make their own cell phones. They also make electronics, right? So they still see full year mobile device ASP and volumes rising, but they are starting to see the softening demand, perhaps because of what we've been seeing here, right? Higher prices and the like when it comes to, of course, these chips and the like.
Yeah, we almost forget that they do a lot of other things.
I mean, it's like the Apple story too, right? That they had
chips.
to raise their prices on some products.
Right?
Right?
Yeah, absolutely, because of the same problems that the other part of their business is actually at the center of, which is the chip and memory shortage story, which I think when you look at that, just on the absolute number itself, it's just mind-boggling and just blows your mind when a company can report profits for a quarter of $62 billion, right? That just underscores really how much money this entire sector of the chip space is making right now between, of course, the few names there. The reason I mentioned that the CapEx story on 2Q, 16.8 trillion, of which the vast majority, 15.4 trillion, was for chips. That's actually also coming through here out of this ongoing call. We're up 6.5%. The early reaction from our Bloomberg intelligence analyst, Masahiro Wakasugi here, discusses that. Can we get that up, please, if we can? The quote, thank you so much. That the company is poised for strong sales, operating profit growth, as to Yvonne's point, and the guidance from the company moving forward. Demand expands across the memory space with higher foldable display shipments for iPhone and Galaxy, also adding some support to the overall Samsung story here. But yes, so it seems to be a very decent set of numbers, maybe hopefully adds to the stabilization.
And I think they even said, right, when it came to second quarter memory revenue, according to Masa, it actually grew about 10 percentage points higher, faster than SK Hynix from the prior quarter. So maybe, compared to SK Hynix, Samsung might have won for the second quarter here. But certainly that's why investors are giving a little bit more grace, as Anthony said, to the stock here today. On top of that, though, this bounce on the KOSPI, perhaps because of what we've been hearing on the regulatory side of things when it comes to these leverage ETFs as
well. They have pledged some additional tools and measures to stabilize the stock market. We fell 11, 12% yesterday. And really to curb the retail access to some of these very levered products, ETFs as a very good example of that, after the rout, wiping billions of dollars of investors' holdings. I think the wipeout on the entire market itself has now exceeded north of 1 trillion in market cap has been wiped out since that decline from the top. Now, the steps were announced following this emergency meeting hosted by the finance minister. Let's get the details of the latest efforts here. And Hee Soo Lee, our deputy bureau chief, joins us from Seoul today to talk us through this. And Hee Soo, what prompted the authorities to come in with very strong measures this week?
Yeah, just like you said, the trigger was definitely a sharp market sell-off. The KOSPI has plunged almost 40% from its June peak, and the market had circuit breakers for 2 consecutive days. South Korea is experiencing this rout after it launched the single stock leveraged ETFs, and they have basically amplified volatility because they're heavily concentrated in a handful of companies such as Samsung Electronics and SK Hynix. Regulators had already announced initial set of restrictions that will take effect tomorrow, but last night's announcement reflects a view that these steps alone may not be sufficient. So this essentially shows that the government is ready to further tighten the market if volatility persists.
Okay, I'm sure you're talking to a lot of analysts out there about what this means, right? Do you think these new measures will work? Will they be enough to stabilize the market?
Yeah, so they can help reduce speculative trading over time, but they probably won't change market sentiment overnight. The government has outlined broad directions, like you said, such as, possible investment caps and higher trading costs, but many details are still missing. And ultimately, Korea's market is still heavily driven by the outlook for Samsung and SK. So stabilizing volatility will depend not only on regulation, but also on fundamentals and investor confidence.
Hisu, maybe just give us the background here. So we talk about these losses a lot, and I think you've gone through the market cap wipeout, the declines we've seen from the top. And at the end of the day, it's the retail investor that's been holding the bag here. What is our understanding of how much retail got involved in this rally, bought at the peak? What are some of the conversations you're hearing on the ground? And as far as the losses that many of these mom and pop investors are now having to deal with because of this decline we're seeing in the markets there. What do we know about that?
Yeah, well, it is very controversial, but the real issue isn't simply investor losses. It's whether those products should have been introduced in the first place. So a lot of discussions are kind of going on about that. South Korea's stock market is much more concentrated than many others. So critics say that made leveraged products particularly risky. And one opposition lawmakers yesterday actually said that, and he actually even labeled the rollout a policy failure. And he said the product has turned South Korea into a casino. And he said the government was more into seeing higher stock prices over maintaining financial stability. So obviously, there's a lot of controversy at this point.
Yeah, certainly a lot of lessons learned on what we've seen here. Hisu, thank you so much. Our Deputy Seoul Bureau Chief Hisu Lee there joining us with the latest on these latest curves. Other corporate stories that we're tracking for you today. Starbucks has raised its full-year outlook after quarterly results topped estimates, suggesting CEO Brian Niccol's efforts to win back customers with faster service and new products are gaining traction. The coffee chain posted a 4th straight quarter of comparable sales growth. The company says results reinforce confidence in its growth trajectory. Adani Enterprises has posted a net loss of $121 million for the 3 months ending in June 30th, compared with a profit of $93 million a year earlier. The loss stems primarily from exceptional charges linked to the resolution of U.S. sanctions investigations, and revenue for the same period surged 50% to about $3.8 billion. Got plenty more ahead. This is Bloomberg.
Let me reiterate, there is no soft inflation target. There is no soft implicit target, not on this committee's watch. CapEx is preparing the ground for future growth. Nonetheless, the precise timing and magnitude of effects on the supply side remain hard to predict. I asked for a good family fight and I got one. I heard a lot of commonality on the questions. Were there different leans on the answers? You bet there was. In the high mountain air in Jackson, Wyoming, I'd like to also frame the big questions. There is a tendency, especially with the proliferation of meetings and press conferences, to get caught up in the myopic.
That was Kevin Warsh, a few hours ago, following the decision and the briefing, of course, speaking after they held rates steady and, of course, caused there was a gap in information that the markets, I guess, interpreted and stepped into.
Yeah.
Right?
You see it in the long end of the
Yes.
curve, right? That 30-year yield surging on the back of that, as there is now this concern that the Fed may be losing credibility here. I'm looking at my inbox here right now from the Bank of America. They just came out with their sort of report of this July FOMC decision. They said dubbed and confused. And really, basically, the fact that there's 3 dissents in favor of a hike, but yet you still hear Kevin Warsh defending why they decided to hold. And really, they said few starkly dovish remarks from the Fed chair, right? And he said, really the fact that markets are basically doing the Fed's tightening for them, right? Given just the rally up in rates. So certainly that sends even more question marks on really, are they really ready to hike or not? But they say that does, because of the credibility issue, this may mean there's more pressure for them to act really in September now.
Yeah, which the market did not price in. In fact, they removed some of the pricing out of the move in September, and the markets are now having to fill that gap, right? And it's, with the lack of specificity on guidance, they're simply adding a premium in Treasury markets, which is really pushing things up. We're just going to get used to. Still getting used to, of course, how the dynamics are, of course, with the new Fed chair. The Treasuries, to the point we were just making there, right? So I think we're now slightly reversing some of the moves that we had from the overnight session, especially on the 2-year yield. So we're up ever so slightly. But yes, see, the 30-year, we're back above 5.2. 5.2%. That's the macro picture. Across these markets today, there's a bounce we're seeing across some of the tech space, Korea, some parts of Japan, most parts of Taiwan, some parts in Hong Kong and China. Lots more ahead. This is The China Show.
Well, I think Warsh was a little bit more dovish than people expected, which is why you're seeing a rally on the 2-year. And the long bond doesn't like it. The long bond doesn't like that they're not fighting inflation.
I'm going to be looking for, eventually the next speech by Waller, because that's going to give us a sense of what did the core of the committee actually, what is he thinking?
And I also think many people on the board are leaning towards a rate hike as well. We've already gotten a lot of indication of that, and so I do think we do get rate hikes in September. I actually think today would have been better.
The market reaction speaks very clearly that now we need to talk about what is the credibility of the committee, because it cannot only be talk, you will eventually have to follow through. And that's why the probability, given this market reaction now, has gone up quite significantly that they will have to move at the next meeting.
Oh, there you go. That was a commentary from the street there when it came to that Fed policy decision to hold rates. And then, of course, that press briefing, which was the seemingly dovish Kevin Warsh, which surprised the market in some ways, right? And really lingering questions, right? Are they just delaying the inevitable of whether they have to actually hike in September now, or can the Fed still hold for the rest of the year?
Yeah, which are all very valid questions. And the issue was he didn't really provide guidance to any of those questions that the markets have been asking, right? So the markets.
The art of deflecting.
The art of deflecting, and I think Anna Wong said it very best on her Twitter, her X account, when she said he could be a very good politician because he said a lot without really saying anything. It's almost like Ronan Keating. You say it best when you say nothing at all.
Yes.
Takes
I wonder where you're going with that.
Yes, there we go. Which is also, when you look at markets today, I think when you look at Hong Kong, so we're a bit flat following the rally we've seen in recent days. And it's now shifted back into some of the old winners like Japan, Korea, and Taiwan, which are actually ripping quite nicely today. In fact, the next board's about to show you that with the Nikkei. The TAIEX index, the Hang Seng Tech, which has outperformed the last few days, have now seen a bit of a pause right now. CSI 300 coming up as well on that very screen. There we go, very nicely, the juxtaposition. Korean assets also coming up, KOSPI, KOSDAQ, and some moves there to, again, protect the retail investor. Has it come too late, though, in terms of that specific part? Oil markets, renewed attacks, in fact, an escalation in the last few hours or so. 4-day look at oil, and as you can see, we've been largely yawning at some of that. VIX futures, bottom of the screens, have also not reacted to the latest escalation there.
Yeah, we're continuing to watch. I mean, at least Samsung is that bright spot here today after those earnings that came through. So, you see that when it comes to tech and the risks involved there, it seems to be recovering after Samsung. Let's get to our markets reporter, Anthony Stevens. He's back with us now. Anthony.
Yeah, to stay with the musical theme, Backstreet's back. So we kind of return to a dynamic where we see good earnings and good results. That's very important for the tech trade, and we're starting with amongst the biggest names in Asia, and that's really reassuring. So in Japan, you have Advantest, a beat and a raise, up 13%, 14%. UMC in Taiwan, UMC has been struggling in the last couple of sessions. Again, a beat and a good numbers, you're up 9%. And Samsung, after a very choppy start, very similar to Hynix that gave people some jitters, the analyst call is going really well. The market is giving them a lot more grace than they did Hynix, and there are a lot more moving parts to Samsung to support this share price reaction. So 7% on Samsung is a very punchy earnings day, and that's drawing a line under risk over the whole session. Now switch the board again, and you start to see the kind of AI shovels trade really stabilize today. You're seeing that across Taiwan, Unimicron had a couple of days back-to-back of kind of close to limit down moves. Now it's close to limit up. Kioxia, a peer of Samsung and Hynix, is up 11%. This name has been off a huge cliff, was down almost 40% from the highs. This reaction is going to be very important to stabilize Japanese retail sentiment. And you have the smaller names in Japan as well, Tokyo Electron, Murata, on the AI kind of semiconductor kind of basic materials trade, kind of stabilizing finally after those concerns about Chinese DUV. Flip the board again to the most pivotal aspect in the second half, which is what is going to happen to all the deals that are coming in the ECM and DCM space, and how well do they trade going forward given the pace of capital raising. So we have two big capital raises in Asia today, Quanta Computer that did a GDS and the Zhongji Innolight IPO. These are on the back foot today as people are buying what fell down instead of new issues, and that balance between new issues and old issues is going to be very important going forward. We saw what happened to SpaceX and America, and the importance of new IPOs trading well cannot be understated in Asia.
Okay, Anthony, fantastic. The context there really, and the relative space that one needs to make, of course, given of course, it only goes up to 100 in terms of your possible allocations there. So you have competing themes across markets today. You have Middle East tensions coming up. You have the Fed conversation. You have this melt up in bond yields. You have a decent set of earnings stories coming through as well. And, on aggregate, Asia's better by about 1.2%. So arguably, the bounce and the tech stories winning out currently. Joining us now is Hebe Chen, Senior Market Analyst at Vantage Markets. Hebe, good morning. Of the many things we perhaps touched on there, competing themes across these markets, what to you is the biggest market story today and why?
Well, I think there's no doubt that today definitely is the Fed leading the market narrative. And I think as you mentioned, that sort of like raise more questions than it has answered the question. I think that what's next that all the markets will looking forward to is, number one question is when the Fed will hike. And I think the deeper underneath question is what is the trigger that will making the Fed to make the move? And I think what the Fed is saying to us is that we will do our job properly. I think they're very much trying hard to convince that 2% still the target. But what they didn't say, and maybe this is the top one question the market is asking, is what is the roadmap to moving towards that? How are they going to narrow down the gap in between the 3.3 core PCE to 2%? I think this is going to question to impact the market quite profoundly and potentially will be the biggest catalyst for the second half of the year.
Yeah, the interesting part I thought when he said was, you know what, the rates markets has gone up. It's already doing the Fed's work for us in terms of tightening. Are we likely to see more of this sort of steepening trade moving forward here until he see a hike from the Fed?
Yeah.
Yes, I think that's also something that I feel actually be confusing and also concerning is that when he said that the market already do the job, it's sort of like market has already shared some of the tightening job for the Fed. I think that is also a warning sign for the fact that the Fed's basically saying that we happy to move behind the market rather than they were leading the market. So I think that was also an encouraging sign for the market to respond even more aggressively. So I think, as you said, that they will potentially see quite even larger volatility. We're going to see across the bond market and across the money market because they are, as Kevin was saying, that they are doing their job to respond to the inflation now.
Okay, well, it's gotten to a point where we all know, of course, equity markets have corrected to the current level. Yields have risen, the 30-year has risen to its current level, and it's almost become a relative trade. It seems stocks are now quite expensive relative to bonds. From an asset allocation perspective, do you think that might precipitate some flows back into bond markets?
Well, I think what you say, the equity market actually pull back quite a lot. I think that we'll have to take quite a bit of the differentiation view because we've seen that Nasdaq's back into the correction zone that has been down so much, and we know that has much driven by the AI trade. Whether the AI trade do have a bit of the association with the fact that the people are expecting the cost of capital will increase, I think that's definitely some of the impact for that. And also, it has sort of absorbed a lot of liquidity from the equity market. Now seems to translating the impact and getting the impact more spreading out into a debt market. I think that's also one trigger. And in terms of your question about relative trade, I think to get into such an uncertain time that when the next high could come, maybe the earlier than everyone expected, or they could be late, much later. I think this is a period that will definitely a lot of uncertainty, and that will, as you said, that will definitely encourage more of a relative trade at this point of time.
Yeah, we're watching what's going on in Korea, right? And quite a interesting sort of turn events for Samsung, right? Where finally good earnings is leading to a positive reaction to the stock and really lifting the KOSPI. Do you think Korea can still lead this AI rally for the rest of the year?
I think what I'm seeing for KOSPI, actually, I'm taking a more positive view in the way that I think the recent pullback, even though it seems quite sizable, I see that as a construction rebuild or an upgrade for the Korean market. I think it's just imagine that the taller this building rises, the more protection nest it definitely have to build up underneath for this building. So I think the KOSPI is now going through a very healthy cycle. They have exposed the issue of the over leverage, overcrowd trade, now have more policy or the more protection that's been building in. So I think for that perspective, I feel quite positive for the longer term outlook for the KOSPI. But whether or not they were leading the AI trade, I think that also we have multiple competitors in the market now. China is one of the key competitors. We also have of course, the Wall Street AI player. So it's hard to say they were leading, but definitely for KOSPI itself, I think I feel more positive.
Have we seen enough from the China AI story for that part of the market to perhaps outperform?
I think I would say that China's AI player do have two benefits or two advantages over these other peers. Number one, this is pretty much policy driven. The policy driven means that it's quite selective. It basically the sectors, even the players, companies, handpicked by the policymakers. So I think that's one of the advantages there. Number two, it's probably more compared to the Wall Street, it's probably more liquidity insensitive. So when the Wall Street concerning about the AI spending, concerning about the cost of capital, I would say that China's AI player seems to have the beneficiary because they're getting more support from the top down. So in that two advantage, I think that's that would bring them more sort of the room or more leg room to run.
In terms of resets, I mean, we talked about Korea seeing a bit of a reset. You could say that about gold prices as well. I mean,
yeah.
Where to next for gold, right? And we had a guest yesterday from LGT was saying, look, we're starting to see maybe a bit of a floor at 4,000, given the fact that central banks are now almost buying on this dip in gold. Are you seeing any sort of more of that opportunity now in gold for it to kind of head higher from here?
Yeah, so interestingly, we've seen the gold prices are actually moving up today, and when they're responding to a quite hawkish, I would say hawkish tones from the Kevin Warsh. So I think that I agree with your point. I think that the gold prices do have a floor. The floor has been quite largely protected by the central banks buying, and especially from the data point of view, I do think the central bank buying is actually coming back from May. They do slow down a bit when the war first broke out, but now they're coming back. So I think I think the 3,900 to 4,000 is the area that I do see they're quite largely protected by the long-term buyers.
Hebe, we're going to leave it there. Thank you. Hebe Chen there, Senior Market Analyst at Vantage Markets.
Thank you.
Still to come, we're continuing to track Zhongji Innolight's debut in Hong Kong. More next, of course, on the company's outlook with Bloomberg Intelligence. They actually think that the 8 shares should command a narrower discount to its mainland listing. But you can see right now, the share's down some 6% in Hong Kong on the first day. You're watching The China Show. All right, we're checking Zhongji Innolight. Of course, you see where the debut, we're extending those losses here across the 8-share market. We're down some 9% on the first day of trade there. So we're just about 45 minutes into the bang of that gong, and it's not looking too pretty right now.
No, it's not. I mean, we've seen better windows for listings here in Hong Kong. And not to say anything about the fundamental story of the company, which is obviously part of the story, but it's also, of course, some of the headwinds that we're having to deal with across the chip space recently. And I think when you look across the chip space in greater Chinese markets today, you're really seeing a downdraft there, not just in Zhongji and Shenzhen. You obviously see it here in Hong Kong. Across some of the SMICs of the world, also seeing declines there. Maybe on the back of the separate story across the rally we're seeing elsewhere, again, like Japan, Taiwan, and Korea. To put everything together for us, joining us here in set is Shan, Bloomberg Intelligence tech analyst with us here in set. This drop we're seeing in 8 shares today, is this a surprise to you?
Well, I think it's hardly a surprise, as Zhongji Innolight has already been listed in Shenzhen. The debut of its 8 shares is largely driven by the relative value. And I'd say its 8-share debut is actually pretty resilient, given the ongoing pressure on the A-share AI supply chain stocks. If we compare the discount, it's roughly 10% now, putting it actually the third tightest stock among dual-listed tech hardware companies trading both in Hong Kong and China.
So tell us a bit more about what we should expect from Innolight going forward here. When it comes to optical transceivers, I mean, they are leader, really, in the industry. Do you think they can sustain that sort of market share?
Yes. I do believe Innolight can post a strong consensus-beating growth in the next 2 years. In the near term, I believe securing upstream components will be a key because the entire industry is undergoing a short supply of key materials such as optical chips and electrical chips. And Zhongji Innolight, with its leading position in the market, is in a better position to secure these core components. In the longer term, we believe capacity expansion will be the key for suppliers to expand their market share. And with the 8-share listing, Innolight can actually accelerate its overseas expansion in Thailand to fund the capacity expansion and capture more market share.
I'm looking at the breakdown of where they get most of their revenue, right? And I think the full year last year was 90% was from outside.
Exactly.
They obviously supply the U.S. hyperscalers. How do we need to think about the risk of geopolitics?
Well, geopolitical uncertainty is a key concern among investors. But I do believe Innolight is navigating the situation well, and it's doing things on 2 fronts. Firstly, it's actually actively migrating its production to Thailand for its overseas customers, and the 8-share proceeds will accelerate that process as well. And the second thing it's doing is to deprioritize its domestic exposure, which can sometimes be sensitive. Its revenue mix from China, the domestic market, actually decreased from 20% plus a few years ago to single-digit percentage in 2025. So by doing these 2 things at the same time, I believe Innolight is navigating the geopolitical situation well.
Yeah, I think up until July, I mean, this was a darling stock, right? People were saying this is the AI supply chain bottlenecks that we're tracking here, the picks and shovels sort of trade. But there's a lot of interesting technology that's emerging to the space as well. I mean, maybe you can educate us a little bit on what CPOs are, co-packaged optics. How does these sort of next generation technology, does that threaten Zhongji in any way?
That's a very good point. So co-packaged optics, or CPO, is an emerging optical interconnect technology that is competing with optical transceivers, which Innolight is making, and a majority of the revenue comes from the transceiver modules. But that being said, we believe that the pluggable module that Innolight make will continue to dominate the market with at least 60% market share up until 2030. And Innolight is taking a lead in that 60%. For the remaining 40%, that's CPO you just mentioned, and also there are several other emerging optical technologies. In that front, we think Innolight also has an opportunity because we see it as more than a downstream module integrator. It does have the capability to design silicon photonic chips, which is a transferable know-how to penetrate into, for example, CPO and MPO. So that's how we see Innolight's longer-term growth, maintaining its lead in the traditional module market and penetrating into CPO and MPO.
Shan, thank you. Fantastic.
Thank you very much.
Shan Chen, Bloomberg Intelligence tech analyst there, just really unpacking the fundamental story across the biggest debut here in Hong Kong in about 7 years. Okay, just very quickly, since we're talking about chips, we're down 8% on the 8 shares now for that company. Hang Seng Tech down 1.2, and as you can see, some of these names listed in okay, so these are both actually in Hong Kong and mainland China. There is CXMT, in case you're curious, where the stock is trading currently. We're all down quite modestly, well, significantly rather, when you look at some of the price action today. China Next Index, yeah, this is one to watch. We're down about 3% on this one going into the thick of the session.
Yeah, it looks like a lot of the market is going back to Korea, which is quite interesting given those Samsung results. We're going to break down a little bit more about that, given the chip profits soaring some 250-fold when it came to those AI memory shortages. We'll have more on those results coming up. And what does that say about really Samsung's outlook?
Okay, U.S. futures are about a couple of hours into, of course, that part of the evening session in the U.S. And, you know, if you're curious why we are seeing some decent upside there, you are getting some punchy moves across some of the big tech names following the earnings after the closing bell, which will obviously dominate the news flow and conversations when we approach, of course, the U.S. as we approach the U.S. And European sessions.
Yeah, the one that
today.
stood out really was Microsoft, it seems, right? Because we did see the shares climb in late trading after better than expected fourth quarter earnings, and really helped by continued strength in cloud computing and AI. Bloomberg Tech anchor Ed Ludlow reports from San Francisco.
Microsoft delivered what investors wanted to hear on two different fronts: AI growth and some clarity around AI spending. Azure, the cloud computing unit, grew 43% in the quarter. That's its fastest pace since 2022, well ahead of expectations. And we got a figure for Azure annual revenue topping $100 billion for the first time. They looked as well outside of financials. So think about, like, how are the AI products doing? Microsoft said that 365 Copilot now has more than 30 million paid seats, up from 20 million 3 months ago in the March quarter. A beat on the top line, a beat on the bottom line. But the clarity on spending bit, on a quarterly basis, capital expenditures, $41 billion. That represents a jump of 70% year on year. An accounting nuance. Microsoft lowered its calendar 2026 CapEx expectations to $175 billion from about $190 billion, but stressed this does not represent a lower investment. It stems from extending the useful life of data centers and office buildings from 15 years to 25 years. And what that does is it shifts more future data center leases from finance leases to operating leases. Essentially, net, the spending and investment expectation that Microsoft has is exactly the same. Nevertheless, that communication was really cheered by investors in the after hour. Also, perhaps the strongest signal on the AI future spending, Microsoft disclosed $130 billion of new data center leases and commitments during the quarter, and that brings the total future lease commitment for Microsoft to $329 billion. A year ago, it was just shy of $200 billion. Bottom line, Microsoft's message wasn't that it's spending less on AI, it's that AI demand remains strong. Azure is accelerating, and despite what are accounting changes, that lowers a reported CapEx figure, the underlying infrastructure build-out continues at pace. This is Ed Ludlow for Bloomberg News in San Francisco.
Right, now staying on the tech earnings theme out of the U.S. here, so let's have a look at Meta. Of course, shares there fell in after-hour session after a disappointing revenue forecast there for the current quarter. It expects to come in $64 billion, the midline missing, of course, the analyst estimate of $63.2 billion. ARM Holdings also slid in late trade. That's after pointing to sluggishness in the smartphone industry. You have royalties from handset makers accounting for much of the company's revenues.
Yeah, you take a look at when it comes to ARM, that does in some ways have a read-through to
Yes.
SoftBank, right? So certainly that's one thing we're watching very closely here. And there you see the shares down close to 2% in Tokyo here this morning. Also, we're watching likes of LG Core, LG Electronics. There is this line that LG is in talks with hyperscalers and U.S. utilities for a supply deal in the second half. So that's really helping some of these stocks here. Why are we checking Hankook Cosmetics Manufacturing?
That's always nice for makeup. Always nice for makeup.
We always like K-beauty, don't we?
Yeah. There's always a need for makeup, certainly. Okay, Minimax and ZAI. Or ZAI on news. Of course, the big news in the AI lab space is Moonshot here surpassing the funding goal of 35B. So that's something to watch. And of course, Budweiser Asia Pacific. This is an earnings story here, of course.
Yep. Korea helped offset China slowness, but yes.
Well, I can understand why perhaps the spike in alcohol consumption. Use your imagination. This is Bloomberg. Right, welcome back. We're zeroed in on the Korean markets. Recently, today, of course, the iteration of that is Samsung and the breakdown of the company's earnings. And I believe they just wrapped up, of course, the earnings call. We have an ongoing blog on the Bloomberg terminal in case you need to have a look and browse at some key takeaways there from the earnings call. Markets are reacting quite positively to the news. Wasn't initially the case, and then we did pick up some momentum to the upside. And as you can see, Samsung is trading 5% to the upside. And you look at some of these numbers, you would think at one point, if you're not too familiar, you'd think these were typos. But yes, 60 billion, 250 fold, of course, increase there in profits on the chip business. And they're also giving some guidance across the other businesses that, for many people have been forgotten, really. We seem to forget that Samsung is a diversified electronics company.
And I think maybe that's initially why the stock was kind of a bit wobbly, in the first part of the session, because the first loss in the mobile division does show that when it comes to these rising memory chip prices there, it's beginning to really squeeze on some of their downstream businesses, right?
Yeah.
So certainly there is that factor that you have to contend with. But then again, as Dave mentioned, some of these numbers when it came to the chip arm are quite eye-watering, and I guess you can't really ignore it here right now, and that's what's leading to this rebound. But, it's really kind of a welcome relief given the fact that in the last 2 days, the stock itself has lost a fifth of its market value. So yes, a 5% bump is much appreciated, I think, today.
It is, and the market's giving, the company just gave us a very decent fundamental story, perhaps for buyers to swoop back in at these current levels. I guess it also helps that some of the South Korean authorities have also put in some backstops there, and as far as some of the ETF plays, so fixing some of the piping around the markets itself. Let's bring in our Seoul Bureau Chief, Kat Barton, who's with us right now, and it's certainly the top story, I would imagine, in your side of the world, Kat. So we had a look at some key takeaways there. What stood out to you from whether it's earnings report or the earnings call? Just get us up to speed, Kat.
It's exactly what you're saying. Obviously, they're amazing figures. But the key thing is those long-term deals that Samsung is flagging, because obviously that is what could really help them break this previous boom and bust cycle in the semiconductor industry. If they can ink those deals, if they can keep it going longer term, they are very optimistic. They are talking about seeing this incredibly strong demand from these AI service providers running through at least 2028. So they are very optimistic. The ironic thing, obviously, is, again, as you flagged, this has been an absolute, stellar results for the semiconductor division. But the irony is that those rising memory prices are hitting their other section, who make mobile phones and also need chips, which now are very, very expensive. And that division has tipped into a loss. So it's a mixed picture, but obviously the semiconductor results are so spectacular, it kind of carries everything else.
Yeah, what does it mean for the stock then, Kat?
Well, the interesting thing, obviously, now we're seeing, a positive on the stock. But yesterday, SK, who missed their expectations, they were really hammered. So the interesting thing in the South Korean market is it's been so volatile recently, and a lot of that is actually linked to these leveraged ETF products, which the South Korean government allowed for domestic rollout in May. So you had South Korean retail investors piling into leveraged ETFs, single stock ETFs for Samsung and for SK, and that has really just accelerated that volatility. So a lot of the huge swings and the movements are not really connected to the news per se, but they are just kind of mechanical linked to these ETF products. The government is really aware of this issue. They held an emergency meeting last night, and they said that they're really going to step up curbs, including trying to raise the cost of these trades, trying to limit retail investor participation in them, and hopefully we'll see some of that coming through and helping to stabilize the KOSPI.
Kat, the strange thing about the story is the ETF story in Korea is extremely fresh and new. The way we talk about it, usually in this case, where a government backs down and reverses some of the moves, would be several years after they reinstated or introduced something. These are several weeks, if not months old. Help us understand now, what is the general attitude of the government and policymakers towards these leveraged products? Did they make a mistake? Are they doing this to protect the retail investor? Where does this story go from here?
They did it at first because South Korean retail investors love risk, right? So they were sending vast amounts of money into leveraged, risky retail products in the US. So South Korea, fairly enough, thought, how can we keep that money at home? So they've allowed these ETF products domestically, as I say, in May. But the government now has regret. The finance minister came out yesterday and apologized. The heads of the two main regulators also apologized. They're saying they should have looked more closely at the products. They should have scrutinized them. They maybe rolled them out a little too hastily. They were really being criticized by opposition lawmakers in Parliament yesterday, with one of them accusing the government of turning the country into a casino. So there's a lot of backlash. And I think the government, with this new slew of measures, is desperately trying to protect and roll it down.
Kat Martin, our Seoul Bureau Chief there, and I think we're just showing it to our viewers. The correction we've seen in the markets, including the stellar earnings recently, means the KOSPI index is now trading at a crazy 4 times earnings.
Wow. Another record.
Another record low, like the cheapest ever, and by an extremely wide margin. For our Bloomberg clients, you can check out the Samsung story, the idiosyncratic stories amidst, of course, the earnings results there, the macro story in Korea, the chart we just showed, everything, of course, on this. TLIV go on your Bloomberg terminal for more commentary, context, and also analysis here.
Yeah, right. We're still trying to decipher what we're hearing from this earnings call is the pricing durability, right, from Samsung here moving forward. These long-term contracts, are they going to be at these sort of today prices when it comes to memory? And are we seeing a super cycle or just an ordinary one? Right? So that's only one thing to watch. Coming up, we're talking about the Politburo meeting, right? It brings us back to, do you remember September 2024? The likes of Goldman Sachs and Bank of America. So it's reminiscent of that policy pivot that we saw just 2 years ago. Shan tells us more what to expect this time around at that Politburo meeting now underway. This is Bloomberg. All right. We teased it before, right? You're going to see a chart here that really basically shows where the trajectory of the economy of China is going here right now. And a lot of people among the economists or economists community is talking about, is this reminiscent of what we saw back in 2024? You may remember that day, Dave. I still remember it very vividly.
Oh, like the back of my hand.
When Pan Gong-shen came live in this press briefing saying, we're going to cut rates, we're going to do this. And it was this massive sort of policy pivot that we saw from not just the PBOC, but also other policymakers here rolling out this broad stimulus to stabilize growth in markets. And some of the macro conditions were similar to what we see now, right? There was a tech-led market rout. Retail sales were weak. And so certainly there is some comparisons to that. You hear it from the street, right? So the likes of Helen Chow from BofA, her team is basically saying, unlike the policy package announced back in autumn of 2024, the focus is likely to be on improving the delivery and effectiveness of existing stimulus measures. Meanwhile, Goldman's Shan says the current setup resembles that time in some respects, and they expect this Politburo meeting to deliver strong easing rhetoric.
So the stage is set. How special will the performance be compared to quite a memorable September 9, 24, of course, as we just alluded to there. Shan joins us here on set, Chief China Economist at Goldman Sachs. I think key question is, how bad is the economy doing? And is it bad enough that it merits something of a big bazooka?
Right. If you look at the domestic economy, I think there's a lot of resemblances. The difference is on the tech sector. I'm sure you've been talking to a lot of guests about the technology, AI, all that. That's different. But if you just zero in on the domestic economy, what is going on? You're seeing domestic demand, whether it's a consumption or investment, slowing down, which is very similar to what we saw middle of 2024. And you're also seeing the pressure on local governments adding up. We saw in June the land sales revenue down 40% year-on-year. So local governments are now more aggressively collecting tax revenues, which is tightening the conditions for businesses. Remember, in 2024, local governments were also under tremendous pressure, and that was one of the reasons the policymakers turned.
So how could they unveil this sort of, what sort of way could they show this easing tone, you think, right?
Right. So we'll be watching the language and to see, remember in the April Politburo meeting, they were very happy with the Q1 GDP growth, 5%. So they said, this is better than expected. So in the second quarter, understandably, they eased off the gas. And we're expecting in this readout, there should be acknowledgement of a weak domestic demand. There should be language on we should increase or accelerate domestic, government bond issuance, government-led investment, the 6 networks, areas that, in the 15th five-year plan, they said they were going to do. And this is a moment they can accelerate and just use the tools they approved at the March 2 sessions. Right? We still have that $800 billion new policy-based financing instrument that they have not used yet. So just start to accelerate the pace of fiscal spending, and that would do a lot in accelerating sequential growth in the third quarter.
Is fiscal spending largely to the reason why growth was so slow? I mean, is that the lever that they will likely mostly pull?
Yes, our calculations suggest from Q1 to Q2 there's a sequential decline. And of that decline, nearly half of it can be explained by tightening fiscal impulse. So the other half between the Iran war, that impact on chemical production, petroleum production, as well as the adverse weather conditions, those are the second part of the explanation.
What about demand side stimulus? What are your expectations there?
I mean, in a way, some of the investment, the underground pipelines or building up data centers, that is demand, right? It's not consumption, but investment is also part of the demand. So we do think what's important is the demand side stimulus or demand side boost. That's what we needed to offset the private sector weakness.
And that comes together, the demand story and the fiscal story comes together in the form of subsidies. Do you think we'll get a return of that? How do you think the fiscal then affects the consumer?
Right, good question. I think at this point, a lot of the projects, or it is hard to find projects that give you a lot of returns. In other words, if there's a project that make financial sense with a lot of financial returns, I would think a private sector would borrow from banks or collect financing elsewhere and invest in those projects. So the fact is that after such a long period of strong investment growth in China, it is hard to find projects with high returns. But within the projects with low returns, there are still projects with big positive economic externalities, right? If we can fix all these pipelines, look at the flooding in the different cities, and if you can build sort of the urban area infrastructure, even though they don't give you financial returns from safety, from people's livelihood, there is social returns for those projects. So we think they will be doing more of that.
We get so many news this week about the innovation that we're seeing in the tech sector, the AI sector, whether it's Kimi, whether it's CXMT's listing debut, whether it's DUVs and how they're maybe in some ways narrowing that technological gap with the West. How do you see that playing out for the broader economy? Because right now it's been quite narrow in terms of where you're seeing that growth in the tech sector. Do you see that in any way spilling into the broader economy?
I think innovation in China most likely will be broadening out in a lot more industries. Even yesterday, the CCTV News are talking about the robotics, the AI, and innovation drugs. So you're seeing more innovation, and that's based on the past couple of decades of what the government has done to cultivate and promote these sectors. I think in terms of the policy implication, when I was in Beijing last week, and my sense is that because of these good news, it reduces the pressure on policymakers. Because if every day you are seeing these good news in the economy, then you don't have as much urgency. This is the difference between 2024 versus now.
Right.
They recognize domestic economy is weak. They need to ease. But at the same time, these good news could make them want to take a more, let's just do the things we already said we were going to do. And if that's not enough, then we can do more. But no need to go all in like September 2024.
I think PMIs are coming out tomorrow, if I'm not mistaken. How do you think? What do you think that's going to show about July and how the economy did?
Yeah, July, when we look at the high-frequency data, our equity analyst channel checks with on the ground, it doesn't look very strong. And plus, there is a sort of seasonality. Every quarter, the last month tend to be strong, but the first month tend to be weak. So for PMIs, we're expecting both manufacturing and non-manufacturing PMI tomorrow to decline from June to July.
Okay. Are rates low enough?
I think nominal rates certainly at very low levels.
Yes.
But if you think about inflation expectations, so currently with the higher oil prices and memory prices, you have inflation not that low, but inflation expectation from our client conversations, people just think the current higher inflation is temporary. So inflation expectation is still low. So if your inflation expectation is low, that means your real interest rate is still too high.
And how does it affect things like demand? Because you mentioned demand for credit, alluded to that. Things like demand for mortgages, for example. Are rates low enough to incentivize people to stop renting and start buying? Is what I want to get to. Because if you solve that, you solve most of the consumption. I would imagine.
Yeah, that's the point we have been making. Like sometimes in certain areas, if you can figure out the financial ways for the math to work, then the market will help you stabilize the property sector or triggering increased demand for property. So as you said, people don't live on the street. So either you rent or you own, right? So your calculation is a rental yield versus a mortgage interest rate. I'm simplifying it. Sure. There are other considerations. So if your rental yield, let's say 2% in top tier cities, mortgage rate is over 3% or 3.1 is the latest, the math doesn't work. So I do think that reducing that mortgage interest rate can help. In Hong Kong, we've seen since the middle of 2025, property prices up 18%.
Right.
Yeah. So the math works because the rental yield is higher than mortgage interest rate.
Okay. Hui Shan, great to have you there, Chief China Economist at Goldman Sachs. We've been talking about really the consumption space and really the luxury sector. This is a great story.
This is really, really
of
good.
Hermes, right? That earnings call, and they were talking about the sort of the weakness that we're seeing in China here, and hear why the C-suite is watching very closely bacon to Birkins. Why are you watching pork prices in particular when it comes to a key indicator of where sentiment is right now?
Yeah, from snake skin to pork skin, I think, if you look at that. So it is, of course, what the luxury handbag maker, their leading indicator for luxury handbags.
Yeah.
And how that's informing them of where demand is across the Chinese mainland. We'll have more meat on the bone, if you will, coming up next. This is Bloomberg.
All right, we are checking, Hermes, right? This is what happened in the last trade there, falling 11% on the back of those group sales from the luxury group there when it came to China. That, it really did show how slow, sales have been there, and it did disappoint investors out there. But it's interesting, right? We kind of teased it.
Yeah.
they're looking at pork prices. What's the relationship between Birkins and pork, you think?
Well, it's the background is, and we have time, right? So take a step back, right? So many years ago we were looking at what is the appetite, or how much room does the Chinese consumer have to spend on beyond staples, right?
Yeah.
And I think the pickup in protein consumption over many years is indicative of how the share of pocket for luxury goods has gone up, right? So if they can afford to have more protein in the diet over a course of a few decades, then that takes us into their ability to spend on other things. Of course, this is the most expensive. So it's indicative of demand for luxury items. It's a long-winded way of saying
it's quite fascinating.
They're looking at pork.
To hear the chairman of Hermes say that, right? Yeah. The KPIs that he's watching very closely. Let's bring in Min Lo, our China correspondent, for more. Tell us a bit more of the context of this comment, and really, I thought it was quite fascinating that they're linking the two in some way.
Yeah, so Hermes reported its second quarter earnings. It was up 6.7%, but as you said, the big disappointment was the China sales, because its Asia ex-Japan sales missed estimates by some 20%. So that's a big vulnerability for a company if it continues to rely on a very lackluster Chinese luxury market. So the executive chairman was speaking to investors at the earnings call, and he was addressing this point, and he said there are two indicators that he watches in China. Have a listen.
I look at two things. One is the real estate market. That is really important. But a less obvious KPI is the price of pork. That's interesting because the price of pork is very low. Pork is eaten particularly during banquets and in restaurants.
So there you go. He said that, you eat pork at banquets, and he said this is an indicator of optimism and desire for feeling joy, something to that extent. And yeah, I guess, if you can afford braised pork belly, maybe you'd be in the mood for a Birkin bag.
Yeah.
I mean, I do feel good after a good suyok.
Or that
roast pork,
deep fried pork chop that we love.
I think I know what we're doing. I think what we're doing okay. Let's say the leading indicator was accurate. What does that tell us about the direction of the appetite?
It's not very encouraging. If you look at pork prices, it is at a 16-year low in June. It's ticked up a little bit in July, but pork prices are notoriously volatile in China, so I'm not sure if it's a good idea to use it as a leading indicator, because it's very tied to the hog cycle. And imagine this, you need 18 to 20 months to raise a hog. And so whenever demand changes, it takes at least 20 months for supply to adjust. So there's always some form of structural mismatch here, and we are in a period of oversupply. So the government has been capping production for months, but supply is still above the production target, and hog farmers are making losses for every sow that they slaughter now. So I don't know, it's going to take a while for pork prices to recover. So not a good sign for those Birkin
It's a good sign for Hermes consumers, right? Because I think it's indicated that, and as the CFO mentioned, that might mean product price hikes for 2027 will be smaller than this year. So yeah.
Good for buyers, not good for investors.
No, but yeah, if you're in the market for a Birkin or a Kelly, yeah, maybe this is the time.
Good company, bad stock. Is a good. What, pork prices are lowest since when?
16 years.
You know what's also a 16-year low? The share price of Hermes. Lowest since 2010. It's trading on a PE of Jansport, if you know, of course, that relative.
Not really a luxury maker, but yes, also a brand that we track very closely. Min, thank you. Of course, we're tracking all things, not just pork prices.
Cross-asset.
Yeah, cross-asset into the luxury space. You rewatch, of course, that segment on our Video Hub. Subscribers can explore live streams or news, interviews there. Make sure to check it out at Bloomberg.com/videos here. Never thought we'd be talking about luxury handbags and really the correlation with pork prices as well.
No.
We're checking movers. Solar stocks are in focus, particularly in China here today. So there's been some efforts to curb the price war we've been seeing across some of these solar names as well. So there are seeing some decent gains for Longi Green. CSI Solar is up some 5 here this morning. I'm still watching that listing debut or dual listing of Zhongji Innolight.
Yeah, which is going the opposite way. In fact, we're now down 14 on the A shares, which have been trading, of course, in Shenzhen. And the debut, not exactly the best first day at school, of course, but it is just the first day. We're down 8%. Lots more ahead. This is Bloomberg.